I'd like to call a regular scheduled council meeting of April 21st, 2026 to order. Agenda item 1.1. Whereas Administrative Professionals Day is nationally recognized on Wednesday of the last full week of April, providing a significant occasion to acknowledge and commend the invaluable contributions of administrative professionals. And whereas Administrative Professionals Day serves as an opportunity to recognize and honor the hard work, contributions, and achievements of administrative professionals across all industries and sectors, and whereas their attention to detail, organizational skills, and dedication ensure that smooth functioning of workplaces and facilitate the achievement of organized goals, and therefore be it resolved that I, Mayor Dave McCrae, on behalf of the Town Council of Redwater, do hereby proclaim April 22nd, 2026 as Administrative Professionals Day in the Town of Redwater. I encourage all individuals, businesses, and organizations to join in honoring and celebrating the hard work, dedication, and achievements of administrative professionals. No public hearings are scheduled for today. Any additions to the agenda?
Mr. Mayor, members of council, with permission, one addition under 14.1.2, and the title is just going to be Lot 19, Block 4, Plan 1473HW, and it's under disclosure harmful to business interests of a third party.
That's in your okay. Thank you. Anything from council? I do have an addition under the closed session for the same reason, disclosure harmful to business interests of a third party. And it'll be 14.1.3. Look for a motion to accept those amendments to the agenda. Councillor Butcher, thank you. Discussion? Call a question. All in favor? That's carried. And a motion to accept the agenda as amended.
I can make that motion.
Thank you, Councillor Cosby. Discussion? Call that question. All in favor? And that's carried. There's no public input or delegations, but we do have some presentations tonight. And the first one is the Redwater Recreation Fire Appreciation Awards. And did you want to start or did you want me to start?
I don't mind starting.
Please.
So, Mr. Mayor, as we all know, we're approaching the 1-year anniversary of the start of the Redwater Recreation Area Fire. Earlier this year, I was asked by Sturgeon County to provide a list of names of people who had contributed substantially to the response to that fire, whether they be first responders or support people in setting up the reception centers and creating communications and just generally helping out with the fire. So I certainly did that. And unfortunately, there was nobody who was able to attend today from Sturgeon County. We did send out the invite telling Sturgeon County that we were going to do something publicly. Certainly, I think on behalf of myself and the administration here, the people that we're going to talk about tonight went above and beyond. Some of them got the phone call at an ungodly hour to come down and help set up a reception center on that, those first couple days when we knew people were being evacuated out of their homes and having that place to gather and get information and try and get as settled as you can as you're being asked to leave your home. So the people tonight, from my perspective, went above and beyond the call of duty, and that recognition from Sturgeon County is certainly appreciated.
Thank you. As council is aware, when this all took place, I wasn't here. I was far away and totally dependent on everybody that was here. This was an opportunity for our community to show collaboration at its best. We worked extremely well to assist Sturgeon County in making sure their residents were safe, well looked after, had a roof over their head and resources if they needed them. And I think it was exceptionally well coordinated by our people. They've been well trained. They've worked hard in their emergency preparedness program. And it just says how much we really depend on these people. And you're correct, Mr. Van Buel, when you talk about the above and beyond. I had regular updates. I was well aware of what was going on. And when I got here, there wasn't anything for me to do other than stand there and wait to get another briefing. Everybody had their job done well. And I believe from council's standpoint, they were in the same boat. They had good information coming regularly. And it is important to let everybody know that the people we're saying thank you to had a cast supporting them as well. So thank you to everybody who had a big input and a big impact in this event. And I would like to take a moment to give out a few things. And then we'll get a picture with Ben, why don't we start with you? Come on up, Ben. Far right. Okay. Any in particular? Nope. So Ben, Sturgeon County would like you to have that as a thank you for what they did. Council would like you to have this as a thank you from our perspective as to the role you played and the job you did. So thank you very much for that. And then on a side note, from the mayor, thank you for everything you did.
Thank you.
All right, thanks. We'll get pictures here in a moment. Jeremy, come on up. Again, from Sturgeon County, thank you for everything you did. I think it was 3 or 4 days that you probably didn't see the inside of your eyelids regularly. It was go, go, go. So, yeah. So on behalf of Sturgeon County, thank you very, very much for everything you did. And on behalf of our community, thank you ever so much for the things that you've done. Over and above that, I know you spent a lot of time in the
Emergency.
yeah, the tabletop exercise a few weeks earlier where you spent another couple of days with, so.
Yeah.
And for myself, thank you very, very much for everything.
Thank you very much.
Keep up the good work.
Thank you, Jeremy.
I'm sitting there.
So Charity, Sturgeon County, again, thank you. Having the building ready and able was an immense pressure off of the command center, and the work you and your crew did was absolutely tremendous. So thank you. And from council, thank you from us for everything you do regularly. So thank you very, very much. And the mayor says thank you too.
Thank you.
All right, thanks. Who's Tingley? So again, on behalf of Sturgeon County, we couldn't have done better to our neighbors to help them out. And I know you were double dutying many times because not only were you across the street, you were over here, you were helping in a number of different venues. So thank you very, very much for doing that from Sturgeon, and from us, a small token of thank you.
so much.
And we really appreciate everything you did. And just to make it fair, the mayor says thank you too.
Thanks so much.
Miranda. So this is the behind-the-scenes person that we don't see an awful lot of, but Miranda, the communications portfolio is huge in events like this. We relied on you many, many times when you were at home to update, to provide information, to change things that had already been sent out. And Sturgeon County would like to say thank you very much for the help that you provided for the response. And council would like to say thank you as well for everything that you do and that you did during that event. So thank you ever so much. And the mayor says thank you. Mr. Van Buell. So you've heard the spiel all the way through, but the one thing that doesn't happen automatically is leadership. And we're very, very proud of what you do for our community. And Sturgeon, I know, has a good relationship with working with you. And we really, really appreciate it. So thank you very, very much for all you did. It's greatly appreciated. I know you have one, but you can have two.
Thank you, Ken.
We'll get everybody to come up for a picture.
With or without?
It doesn't matter, whatever you like. With. And if council wants to come crowd around,
No. You can tell Dee Dee she has to be here for the formal presentation.
come on, you guys. Come on, Mel.
Squish it.
Rob doesn't get in on it.
Well, here, Ben, do you want to take this for us?
Yes, I should have.
Shot?
Ed's probably taken one or two important pictures. Squiggle in, you guys, and watch the camera.
Funny, it was just a year ago.
No, he got his eyes open. There we go.
All right. Again, thank you, everybody.
I didn't even notice.
You guys want to stay for the financial statements?
The goods and run.
Yeah. Thanks, you guys. 7.2, audited financial statement. Fun stuff. Ms. Tingley, we're in your hands.
Gonna pass it off to
Benji, all right.
All right, now we get to the exciting stuff. Okay, so I think most folks have kind of been through this before, but my plan today is to cover off a couple different documents. First of all, the financial statements, and then secondly, our audit findings document. So do you want me to share a screen, or do you just want to look in on your packages, or do you have it there? It's kind of up to you.
We've got your package here, Benji, if you want, however you're comfortable with is fine.
No, I can just tell you kind of what page I'm on. The
public.
Along in that
Oh,
case.
Yeah, probably best if you do share, so anybody online that looks at the program can see it.
There we go. Okay. And like I normally say at the start of these things, you don't have to wait until the end of any particular section. If you've got a burning question, you can just ask me at any point. Now that that's on the screen, I can't see you anymore, but you'll just have to yell at me, I guess. Okay, so to get going here, just to cover off some of the different documents or the reports at the start of the financial statements. This is the management responsibility document, and it just outlines the different responsibilities of the three parties involved from an audit perspective. First one being management, so your management, they're responsible for the financial statements and maintaining good internal controls. Mayor and council is responsible for overseeing management in its performance and financial reporting responsibilities. And then us as the auditors are obviously here to do the audit. So that's kind of what that thing outlines. The next page is the audit report itself. And so this is the couple pages that belong to MNP that we put onto your financial statements, basically just saying whether there was anything of note, any issues or problems or misstatements in the financials. So the first paragraph just talks about the fact that we've audited the town's financial statements at December 31st, 2025, which is your year end. And then the second piece is our actual opinion. And it states that, in our opinion, the financial statements present fairly in all material respects the financial position of the town at December 31st, 2025. So kind of a long-winded way of saying a clean audit opinion, which, you know, from an audit perspective is the gold standard. You can't get a better audit report than this one. It basically means there are no issues. The second part here just talks about the fact that we've audited in accordance with Canadian generally accepted auditing standards. And those are the general standards that every auditor has to follow when doing any kind of audit. And then the next piece is just reiterate the different responsibilities of the various parties, which was already covered on the first page, that other document. So it just kind of reiterates that same information. So overall, clean audit opinion. So then we get into, well, for me anyways, the fun stuff, the numbers. We've got the first page here being the statement of financial position, which is basically a snapshot at your fiscal year end. There's the two columns, the one in bold, I'll call the current year, that's 2025, and then 2024 is the prior year, which is your comparative, so you can kind of compare at the end of the last two fiscal years where the town was at. So just to touch on some of the high points, you can see cash pretty much the same, about 4.5 million sitting in the bank accounts right at the end of the year, so no real change from a cash perspective. I mean, lots of cash coming in and going out, but at the end of the day, left, right, pretty much where you were the previous year. So that's pretty consistent. Your investments are various Gas Alberta investments. They don't really change. They're just the initial investments. Trade and accounts receivable is related to the amounts that are owing to the town at the end of the year. So these are amounts that, you know, some customers or different granting agencies owe the town at the end of the day. They're not property taxes receivable, because you can see those are separated out on their own line below that. But you can see at the end of the day, at the end of 2025, the total outstanding receivable balance was about 690,000 compared to 938 the year before, which is a decrease of about 250,000. Both your trade accounts receivable, so just the general everyday receivables, as well as the utility receivables were lower than the prior year. So collection was a little bit faster than the prior, which is great. On the property tax side, you can see it's gone up about 140,000, and there is a note 5 when I get to that one, which shows the breakdown between current and arrears. So arrears would be things that are not due immediately, they're a little bit older. So there's a breakdown of those balances on note 5. When I get there, we can look at those, but overall, it's a little bit higher than last year, about 140,000. On the liability side, accounts payable, this is sort of the opposite of the accounts receivable. It would be the amounts that the town owes to other groups, so vendors and suppliers. You can see that's gone up about 60,000, so nothing too large there, just based on timing of when you're making the payments on your invoices and payroll, source deductions, things like that. Deferred revenue, this one changed a bit. It was 67,000 last year, up to about 130,000 in 2025, which is an increase of about 64,000. I'll look at that note as well, note 7, when we get there. It breaks down all the different deferred amounts. And just to kind of remind everybody what deferred revenue actually is essentially funding that you received, mainly grant funding, that has specific purposes. So if you haven't spent it on that specific purpose, it gets deferred or carried over into the next fiscal year. So the main reason it's higher is there was an LGFF grant that wasn't fully utilized, so it gets carried over into the next fiscal year. Deposit liabilities, so these are deposits received in the year for various things. You can see that's down quite a bit, about 110,000, And that's just because some of those deposits were repaid to the folks that paid those deposits initially. So as those deposits get paid back, the liability goes down. Long-term debt, this looks pretty much the same, about 3.6 million, but there was quite a bit of change within that. There was a new loan or new debenture that was taken out about 465,000, but it was offset by standard principal payments on that loan plus all the others of about 448,000. So the net impact of a new loan coming into the town and then the repayments of the existing loans made it pretty much break even at the end of the day, about 3.6 million. Asset retirement obligations, we talked about this at length in other years because it was kind of new, not so new anymore. It'll just kind of go up with inflation unless there's actual remediation work done to remove some of the asbestos in buildings and things like that, but there was none of that this year, so just the standard increase due to accretion and inflation. Down in the non-financial side, the tangible capital assets are basically your infrastructure, so anything that is an asset that's going to last longer than a year and is of some significant size from a cost perspective. That's gone up about 525,000 from 28.7 to 29.2 million. Total additions in the year, so asset additions, was about 1.8 million. Some of the bigger ticket items included in the year were some significant roof repairs on the arena and curling rink. That was about 475,000. Some road work that was done, about 130,000. And then some water infrastructure work on 52nd Ave. That was just under $1 million, actually, about 985,000. So those are the big ticket infrastructure amounts that were paid out in the year. And it's all kind of offset by the amortization in the year, which was 1.3 million. And amortization is just that depreciation of your assets over time. So asset additions minus the amortization in the year worked out to about that $500,000 change. The next two are pretty small, but inventory for consumption is just kind of what it sounds like. You've got some supplies on hand that you've purchased in 2025 that you'll be utilizing in 2026. And then prepaids is similar, but more on the service side than the items. So inventory is items on hand, and prepaid expenses are services and contracts that you've prepaid, mainly insurance and things like that. So overall, accumulated surplus, which is just kind of a math calculation of the total financial assets above here, minus your liabilities, plus your non-financial assets, gives us this $30 million overall accumulated surplus. So it's the total overall size of the town, essentially. And I do have another schedule 1 here, that breaks down this $30 million into a few different categories. So on to the next page. This is your statement of operations. So this is similar to the previous one where you've got your columns. The difference here you'll see is that there's the budget column. Obviously, it is your original budget that showed how much money you anticipated to bring in and then spend on the expense side. So if we kind of look through some of the bigger changes, from an overall perspective, you look at the bottom first, you had budgeted 8.1 million in total revenue, came in at just under that, about 120,000 less than anticipated, but pretty close. As you can see, property taxes was about 60,000 under budget. Sales and user fees was about $43,000 under budget. Gas sales was about 80,000 and under budget as well, and that was just based on the lower rates in 2025. The others are fairly consistent, except for, you can see licenses and permits was actually higher. You received more in licenses and permit revenue than you had expected, and this one's just tricky, right? You don't really know in advance how much you're gonna get from that, so kind of a conservative budget there, and you got more than that, which is good. On the expense side, again, kind of looking at the total area here, total expense budget was about 8.5 million, but ended up coming in under that at about 8.1, which is under budget by about 390,000 overall, which is good. From an overall perspective by kind of program area, you can see Parks and Rec is very close to budget at 1.7. Transportation is also very close at 1.5. Environmental services is a little bit under budget, about 130,000. Some of the things in there, there was less recycling costs that were incurred in the year, and there was just actually no major repairs, so that kind of, sometimes big repairs come out of the blue, but there weren't any major ones compared to the budget this year. This one, administrative and legislative, that is also under budget by about 60,000, and that mainly has to do with staff turnover in that area. Gas production, pretty consistent. Planning and ECDEV, this one is under budget by about 40,000. Basically, less permits in the year, so less costs around that. And then protective services is similar to administration, where there was some turnover. So you did end up under budget in protective services as well, about 64,000 less than the budget there. So overall, when you factor in all the different revenues minus the expenses, we get to a deficit of about 70,000, with even and less than what you had expected from an operations perspective. So that's good. Had some minor contributed assets down in this other area, and then government transfers for capital. This is kind of separated out. It's not part of your general operations. That's why it's down in this bottom section. But you can see the budget was quite high. That's because you kind of budget for all the different projects that you're wanting to undertake. And it's a little bit less than that because some of those projects either didn't get started or weren't completed in the year. Some of the things that were budgeted for were the 47th Ave work, wastewater collection, bridge rehab, and some arena renos. So some of those things are either in progress or haven't started yet. But that's why the budget was quite a bit higher than the actual revenues from a capital perspective. So when you factor in all the capital revenues, we end up with a surplus of about 366,000 overall. Any questions on those two? Those are kind of the two main statements in the financials.
Anything for Benji?
Good, perfect.
So far, we're good.
Perfect. The rest is going to be quick then, so that's good. So change in net financial assets. This is a required public sector schedule here. It just calculates that assets minus liabilities number in a little bit of a different way. It doesn't say anything other than things I haven't already talked about, so we'll kind of skip through that. The next one is the cash flow statement. The only thing to note here is it's broken down into a couple different categories, generally 4 categories. So this shows the total cash that came in from operations was 1.8 million. So all your revenues minus expenses. Then on the financing, I talked about this. You brought in a new loan, new debenture of 465, paid off 448,000. So kind of break even on the debt in and out. You had 1.8 million of tangible capital assets, which I talked about on the previous page as well. And then some change in your restricted cash. But overall, cash will really only change by about $80,000. So after all the ins and outs, there wasn't much change in cash overall. Okay, the next page here, if I can get it to fit on one. So this is that 30 million. I talked about your accumulated surplus. I told you I had a schedule that kind of broke that down a little bit. That's this schedule here. You can see the biggest chunk of the 30 million is this 25 million, and that relates to your equity intangible capital assets. So what that represents is your total assets minus the debts against those assets. So if you think about it in real world terms, if you've got a $500,000 home that you have personally, and you have a $400,000 mortgage against it, you've got $100,000 equity in your house, right? Just basic math. That's what this is saying. So you have a certain amount of assets, but you also have some loans against those assets. So this 25 million represents the equity that the town has in those assets. The middle column is your restricted surplus, or otherwise known as reserves. So you've got about $3 million set aside for future specific uses that council has set aside through motion, board motion or council motion to set aside for specific purposes. And when you want to use those funds, it goes through board motion or council motion to come out of the restricted surplus. So that's about 3 million. And there's a note that breaks that down into specific categories as well. And then unrestricted is kind of everything else. There's just kind of the leftover piece that's not specifically earmarked for future use. All right, next schedule, just to tell you what it is. It's just a little breakdown of your tangible capital assets, shows the breakdown of where those asset additions are. So here you can see total additions in the year, that 1.8 that I talked about, broken down into the different categories of assets. So nothing too new there. Schedule 3 is a breakdown of your property taxes. This one's, I like to show this one, because as you know, as a municipality, you get the privilege of sending out property taxes or getting property taxes coming in. The thing that some residents don't understand is that you're charging 4.4 million, but 900,000 of it you don't even get to keep, right? It goes out to Alberta School Foundation and the other areas. So really the only part that stays within the town is the 3.4 million. So this kind of shows that breakdown. Schedule 4 is a breakdown of the different grants, so local, provincial, federal, from a capital and operating perspective. Just the same numbers I talked about, but a little bit more detail. Similarly here, this next schedule, Schedule 5, is the statement of expenses by object. So before we looked at the expenses, it was by department, so Public Works, Administration, all the different Parks and Rec, all the different types of departments you have, but here instead it's broken down by specific expense type, like wages, materials, amortization, that kind of thing. So it's the same numbers, it's broken down in a different way. And then even further breakdown on Schedule 6, well, that's way too big to fit. But here you can kind of see again, it's in both ways now. You see the expenses by department along the top, and then expense types along the bottom here. So it gives way more detail as to what's going on in each department by specific expense and revenue type. So same information, just broken down into more detail. Then we get into the notes, which if you heard one of my discussions on financials before, it always starts the same. The first number of pages in the notes are kind of standard boilerplate accounting policies that look the same in any municipality, so nothing too unique to go through specifically for Redwater. So I will kind of, sorry, I'm going to scroll here pretty fast just to get to some of the notes that I think are important. The first one here is note 5, because I talked about that initially, where I said your total receivables from for property tax was at 900,000, and it breaks down the specific amount that is current and arrears, so less or more than 30 days basically. So shows that breakdown here. Bank indebtedness is another important one, just because it's not discussed anywhere except the notes, but it does say that you have access to a line of credit with ATB for up to $1 million, and you did not draw on that at the end of the year in 2025 or 2024, but just so you know, you do have access to that if you needed it. Deferred revenue, this is, I alluded to this one as well. It shows that breakdown of all the different carry forward funds that you've received from grants that haven't yet been fully spent. So this balance end of year at the very far end is what you have left over that's carried over into the 2026 year. So there's some other grants, small ones. Then there's the MSI and LGFF that are specific grants. So total 131,000 of funds that are carried over into next year. Long-term debt, this gives a little bit more information on your debentures, kind of shows the repayment schedule that you have. So it just shows in 2026 you're going to be paying 465, and then it kind of drops down because some of the debt is coming off. So it shows the different rates as well of the various loans. The next one is an important one for any municipality, because you want to know, do we have too much debt, not enough debt, just the right amount? I mean, this doesn't really tell you if you have just the right amount or too little, but it will definitely point out if you have too much. So what this looks like, or what this shows, is the total debt limit. So this is essentially 1.5 times your total revenue. So it gets you this $12 million, and then the total debt that you currently have is 3.6. So you actually have the capability, according to the Municipal Government Act, to borrow a whole nother $8.4 million. So you're nowhere near the max allowed debenture borrowing. And then similarly on this debt servicing, it's kind of same from a percentage basis, but you could service debt all the way up to $2 million a year, so principal and interest of $2 million. And right now your principal and interest annually is only that's $465. So you could service a lot more debt if you needed to within the town. Next one here on note 12 is the salaries and benefits disclosure. I just like to make sure that everyone's aware that this is on here just because it's public information and your names are on it. So just making sure everyone is aware that that is a required note under public sector. So it's the elected officials, CAO, and designated officers that are required to be disclosed. And then I think the last note that I was going to touch on is your restricted surplus, otherwise known as reserves. That 2.9 million that I showed you on Schedule 1 is here at the bottom, and you can see kind of how it's specifically broken up. So council has set aside, $700,000 for gas distribution, offsite levies, transportation, and so on. So this money has all been sort of internally earmarked for future use on these specific areas. All right, a lot of talking on that financial statement update there, but does anybody have any questions before I move on to the audit findings?
Anything for Benji on that?
After 16 years, it's getting clearer.
Year 20, it just sinks in perfectly.
I do have a question, but I think you might be about to clear it up with your next part of the presentation, so I'll wait for a minute.
Sure, well, let's see if I can answer it ahead of time. That's usually my goal. Okay, so the next one, if you have got the package in front of you, kind of looks like this, a little bit more colorful. Audit findings 2025. So again, just give you the high points here, skip past the first page and the table of contents. Engagement status. So where are we at with this audit as of right now? So from our perspective, we're essentially done. Just a few things left to do, which would be to get the financial statements approved, which hopefully happens today, get some signatures, which Allegra has a number of different documents to be signed. And then the last thing, which we always do, is have a quick discussion around subsequent events. And just to remind everybody, that would be anything that has happened that would be kind of significant to the town from December 31st, 2025, which is your year end, to today, which is the report date. So maybe I'll just open up the floor to let anybody, let me know if there's anything significant that I should know about that's happened in 2026 so far.
Not that's bounced across our desk yet.
Okay, perfect. I like that answer. That's good. So that's good. So no issues around subsequent events. I guess theoretically, what would happen if you told me like, oh, there's a $10 million lawsuit against the town that just popped up or something like that, then we might have to kind of update our financials and have what's called a subsequent event note and just kind of describe what the issue is. But obviously, that is a very rare circumstance. So just something we have to talk about. So the next piece, the audit report, is dated today, the 21st, which is the date of approval. Although I just noticed this says 2025. Let's make that 2026. I'll update that. Whoops. So yeah, 2026 of April is the report date, so I'll update that. And then we do have an unmodified opinion, which is, like I said, the clean audit opinion with no qualifications. So the next page is just sort of the overall table to go through things to bring to your attention. So when we presented the audit service plan back in January, we would have had a list of risk areas. So we have to let you know if there's been any changes up or down to the risk. So we did change a couple things. So tangible capital assets, we upgraded a little bit in the risk level because we did have a contributed asset this year. So we have to do a little bit more work around that, make sure it's correct. And then payables, just because of increased risk around cutoff, we increased the risk a little bit on that. Doesn't really change anything. A few more tests and things like that on our end, but doesn't change anything noticeably from your perspective. Difficulties encountered, we didn't have any issues. We're here today on time, getting the audit completed, so that's great. We did not have any issues with fraud or suspected fraud that came to us during the audit, which is great. Nothing would suggest there was any issues around non-compliance with laws or regulations. Deficiencies in internal controls, there was no significant deficiencies in internal controls, which is awesome. You don't want to have any holes in your systems or anything like that, so nothing major to report there, which is good. No issues around going concern. The town is seemingly in a healthy position. It's not bumping up against its debt limits or anything like that. So it seems to be in a good spot. Definitely want to acknowledge the cooperation we received from Allegra and her finance team. The audit went well again this year, so kudos to her and her team. We do have some differences, so we call those our SUD differences, schedule of unadjusted differences, which I'll touch on at the end of this report, just so you're aware of all the little things that we noted from an adjustment perspective. Our materiality was sitting at $390,000, which again is just a percentage of revenue. The accounting policies used by the town are appropriate and consistent. The estimates used are pretty consistent, which is allowance for doubtful accounts, so the collectability of receivables, so we do work around that. Amortization, how long is an asset gonna live for? And then of course the asset retirement obligations has a number of estimates included in it as well. The disclosures, which would be the notes in the financial statements, those were all appropriate, so that's great. The other stuff is, again, sort of template things, so I wasn't going to touch on that. But the risk areas, again, this is similar to what we had in our service plan, but management override of internal controls, that's a standard risk in any organization. We do have the existence of accounts payable, so just cut off of accounts payable. We always make sure the cutoff is correct. Salaries and benefits, it's not really a significant area from a numbers perspective, but it's kind of an important one because it does have people's names on it, so we want to make sure those numbers are accurate. And then the tangible capital assets I mentioned, because there was some contributed assets this year, we want to make sure that's accurate because it's kind of a tricky area because there's no cash changing hands with those, so we want to make sure those are picked up well and appropriate. And then we get into the actual unadjusted differences. So this is the table of things that it could be like small timing differences, cutoff errors, things like that we accumulate. Because I know sometimes councils say, well, how is my materiality so high? I would care if there's a $100,000 error somewhere. And I always say, well, we care about those smaller items as well. We might not adjust for them, but we'll always bring them to your attention if we do find items. So that's what this is. The biggest one by far is this first one, and I wouldn't be too alarmed by it. It's a big number, but it's a major conservative estimate on our part. So what it represents is I think there was 3 larger property owners, I guess, that hadn't paid in a while. And so the assessed value of their properties was higher than the amount owing. So you'd think, oh, well, the payment will be made at some point if the properties get sold through tax sale. But I think in some cases, those tax sales happened and it didn't sell. So us as conservative accountants, we say, well, they're definitely going to sell if the properties are really marked down. So we say, well, if you mark down the price of those properties and sell them, there's about 240,000 of those that it would not be collectible. So this is a big estimate on our part, just to be conservative. It's likely way over aggressive from an allowance perspective. That's why we don't suggest you post it into your financials, but just a potential uncollectible amount if none of those properties sell, that kind of thing. So that's by far the biggest one, and it's just based on an estimate. So I wouldn't be too concerned about that one. These next 2 are smaller, and they represent really small balances in your accounts receivable and accounts payable that are just too small to bother, auditing. It's not, the cost benefit isn't there for us to go and look at every $3,000 balance. So we just kind of accumulate those and put them on here saying they're potentially wrong because we haven't looked at them, but they're probably fine. That's what these 2 are. This deferred revenue is probably right. It's probably just a timing thing, but but there was no specific approval on this project, on the spending on this project before year end, so about 34,000 is potentially in the wrong year, but it's correct overall, so no issue there. We did find one invoice that should be picked up related to subsequent disbursement testing. So we look at payments that went out after year end, and we found one item that probably could have been recorded back in the old year. So that was 39,000. Again, just a timing thing. It's not an incorrect item. It's just recorded in the wrong fiscal year. And then this one is, there was a under levy overall. So technically, when you have an under levy, you're supposed to adjust the property taxes in the year of the under levy, and then when you collect more next year, it goes against that receivable. So that, again, it's just a timing item. So overall property taxes is correct. It's just, which year does it belong in? So that was a timing item as well. And then lastly, just some minor accumulation of some cutoff errors. So the overall difference was about 230,000. But if you remember, the first one was about 240. So everything else kind of nets out. Timing, it's just timing from year to year. So I wouldn't be too concerned. It's just this one, and this one is basically an audit estimate. So not really an item that I would say is definitely uncollectible or anything like that. Just us being conservative accountants saying there's a potential that we could be overstating receivables by about that much. So overall, there's not much on here. And like I said, the ones that are is just kind of audit related. So I would say there's not much to be concerned with on our schedule on just the differences. And that, I think, brings me to the end of this one. So I don't know if I answered your question through that document, but by all means, I'm open to any questions.
Anything through the bench? I'm just waiting for my page to open up here, Benji. Okay. In your significant audit accounting and reporting matters schedule,
Yes.
you kind of answered the one about the moderate risk to high risk and
Okay.
significant risk. Can you just rephrase that just so I've got it clear as to why we would adjust risk factors?
Yeah, so when we take a look at our plan, at the planning stage, this is before we're doing the audit, right? We're doing this audit plan in, say, December or even November sometimes, just to get ahead of it. So we don't really know what new and exciting things have been going on within the town. So we would present what we're expecting the risks to be based on last year. So then when we get into the audit, we might say, oh, you know what, there's this one item that kind of is unique this year, and in this case, it was the contributed assets, because the town hasn't had contributed assets in a while. It was only 40,000, but we don't really know until we, get in there and dig around if that number needs to be higher, right? It's not so much what's there, it's what's potentially not there that is the risk. Like I said, because contributed assets don't have a cash component, it's really easy to see if you pay $40,000 for a piece of land, that's an easy transaction to audit, right? You've given somebody $40,000 and they give you the land. But with a contributed asset, we have to look at FACs and things like that through engineer reports to kind of assess the timing of when these assets are contributed to the town. So we didn't really know about that ahead of time. So when we started going within the audit, we noticed there were some contributed assets, so we just increased the risk around that. And so we could audit a little bit more in depthly. That was the big one there. And then existence of accounts payable, same thing, just going in, we kind of noticed some cutoff items, so we wanted to dig in a little bit more, so we increased the risk level so we could, increase our sample sizes. It's just our audit methodology. We don't want to over-test in certain areas. If something is listed as low risk, we would test a certain number of samples. If it's higher risk, we test a little bit more. So that was all that was, just a difference once we got in there.
And in the same process, you talk about the significant differences. When I see something that says significant, I start to cringe just a little bit. So can you give us that one again, please, just for clarification?
Sure. So if anything, for it to go to council, it has to be kind of determined to be significant. So we don't bring every little item to the council because we only look at the things that we deem are worthy of bringing up. So from an audit perspective, that language means significant. So even if it's an $8,000 item that, you know, was recorded in 2025, but should have been recorded in 2026, if it's on that schedule of unadjusted differences, we want to bring it to your attention, so we call it significant, even though it's not, you know, from a dollars perspective, not really significant, but that's just the audit speak for things we want to bring to your attention.
Okay. Anything else for Benji? I'm going to ask the big question because obviously with what's happening in our region, we've got some concerns from our electorate as to how we sit as a community. Did you have any ringing bells or red flags saying we're moving the wrong way?
No, I kind of mentioned that a little bit. It's a tough question if it's a specific, you know, do we have enough reserves? That's not a question I can answer specifically, because it's just a matter of your preference, right? So I always look at it as, do you want the residents of today to build up reserves for the benefit of the residents of tomorrow, or vice versa? There's always this balance, right? You kind of have to kind of smooth those things over time. So it's nice that you have a reserve and you do have sufficient cash in your account. It doesn't have to match the reserve, but in your case, you do have a significant amount of cash based on the reserves. You have a bunch of unrestricted surplus as well. I believe it was over $2 million. So there are some surpluses from prior years that you do have access to if there was ever, you know, a deficit in a year, things like that. And also the debt limit is a significant indicator as well. Yeah, you're not even close to half of what you're eligible to be up to. So from those points, I would say that, yeah, the town is not in emergency mode or anything like that. In fact, it seems like it's in a good position moving forward.
Thank you. Anything for administration through to Benji?
For myself, Mr. Mayor.
You're just as confused, aren't you?
I think next on the list is the proposed motion off of our RFD.
We're gonna go way back up to the top here.
Councillor Olson.
I'll make the motion that the 2025 audited financial statements be accepted as presented and circulated.
Thank you. Any further discussion from council?
Mr. Mayor, was there not one change that we had to make on the date?
25 to
It's
26.
just the audit findings, not the reserve document.
Yeah. It wasn't in the financials, it was in a administrative part of it.
Just double checking.
Yeah, good point. I'll make that change, but it shouldn't, it's not gonna impact your motion or the financials at all.
Okay. Last chance for discussion. Not seeing any, I'll call that question. All in favor? And that's carried. Benji, once again, thank you very much. It's always nice to see that little note that our staff was helpful and accommodating, but it's also nice to see their commentary that your staff was helpful and accommodating. And with this remote audit process that was followed this year as a template, my understanding is it worked pretty good across the
Yeah, it was a little unique for you guys. It's not unique to other organizations. We've done it in the past, but yeah, it was definitely a change for the year, but I think it worked well.
Yeah, absolutely.
All right. Thank you very much.
Thanks, Angie.
Thank you. And so I'm assuming there's some signatures. You can get those back to me at some point, and then I'll put together the final package and send it back to you for, you know, so you have it for your records, and then we're done.
Thanks very much.
Thanks, Benji.
Have a great evening.
Yeah, see you later. Bye-bye.
Agenda item 8.1, the April 7th regular council meeting minutes. Councillor Olson?
Make a motion, we accept the minutes from the April 7th meeting as presented.
Thank you. Errors or omissions? Discussion? Seeing any? I'll call that question. All in favor? And that's carried. Any business arising out of the minutes or unfinished business from administration?
None from administration.
Anything from council? Moves us all the way down to 12.1, council reports. Councillor Smith, anything to add to your report?
No. No.
Councillor Spicer? Anything to report, Councillor Butcher?
Well, I thoroughly enjoyed the mayor's breakfast. And other than that is my duty.
Okay. Councillor Olson, anything to add to yours?
As presented.
Councillor Cosby?
Nothing at this time.
Mine is as presented. Look for a motion to accept council reports. Councillor Smith?
I'll make that motion.
Thank you. Discussion? Call that question. All in favor? And that's carried. Correspondence and information items. Got general correspondence. Alberta Munis has sent some information out with regarding Bill 28. I sat through their webinar. I believe Councillor Cosby did as well. I'm not sure who else was able to jump on it. I would highly recommend council, if you have any questions, to print off the little booklet that they included with their information. This is something I haven't seen on their reviews in the past. They've actually identified whether they support the modification to the bill, or whether there should be some more activity on it, or whether they plain outright don't like it.
Yeah.
So there's almost a color coding on each of the items for the bill. So if you do have the chance and you need some reading, that's a great place to start. We also have Travel Lakeland, the Tourism Week invitation. Unfortunately, today was the last day of their presentations, so we weren't able to get to that. Letter from Municipal Affairs introducing Bill 28 and why they've brought it forward. Their assessment model review and their fact sheet. I think it's really important to touch base on the assessment review model. If council recalls, about 3 years ago, Mr. McIver talked to us at Alberta Munis about the assessment review that was being undertaken by the province. They had just completed one by industry, and there was some pushback from municipalities. So they recreated another review, and it was interesting to see in their release here that the engagement process was designed and led by stakeholders. It wasn't led by the government itself. So they anticipate there will be no impact or changes in 2027 and 2028 resulting from these policy changes, but I would suggest we'll start to see an increase in impact as we move forward down the road on that. Then we've got their little review sheet that they sent out, as well as a fact sheet. So those are all part and parcel of their release information, I guess, with regards to the industry assessment. Look for a motion to accept. Councillor Olson?
Make the motion that we accept these as information.
Okay, thank you. 13.2.1, proclamation request regards the Guillain-Barré syndrome, chronic inflammatory demyelinating polyneuropathy.
I wouldn't even have tried.
Yeah, that's
Well, they got-
good enough for me.
I just want to let council know, I did do some investigation with respect to this. This can be extremely debilitating. huge impact on people. And they're looking for a proposed, or for a proclamation for, I believe it's the the entire month of May, is it not?
Yes, it is.
Yeah. So that was the request with respect to Jenny Ryby's request. And there's also the engagement opportunities with Travel Lakeland. And again, as I said, they had two open houses, and one in Smoky Lake and Two Hills. But today was the one in Two Hills, so I'm assuming we missed that. Any action from council's perspective on either of these two? Councilor Olson?
Make the motion that we accept both of them as information.
Any discussion? Call that question, all in favor? Opposition? Carried. Councilor Cosby?
I move that we move into closed session.
Thank you. I'll call that question, all in favor of moving to closed session and a short recess. That's carried. Counselor Spicer.
Motion to come out of closed session?
Discussion? Call that question, all in favor? And that's carried. Counselor Olson.
I'd like to make a motion to direct the CAO to have communications with the Sturgeon County's CAO, that the recreation and the fire agreement will be handled by council through the ICF agreement.
Discussion? Not seeing any, I'll call that question, all in favor? Carried unanimous. Oh, Counselor Cosby.
Motion to adjourn, your worship.
Motion to adjourn, all in favor? That's carried.